As interest rates start to fall around the world, investors are moving their money out of term deposits and into high-yielding assets. Dividend stocks are often a top pick. In this video, I'll share Australia's 15 highest-yielding stocks on the market right now. They all pay a yield above 7%. Their stock price has remained steady, and I've eliminated volatile industries. Maybe you have tried picking stocks on your own before and found it to be challenging. eToro is one of Australia's most popular trading apps, allowing you to invest in stock, ETF, and crypto assets. With its CopyTrader feature, you can automatically replicate the strategies of top-performing investors both from Australia and around the world. They even have a demo portfolio allowing you to practice and learn the platform before using real money. Make sure to check out eToro using the link down below, but for now, let's jump over into our first stock. With a footprint of over 120 stores across Australia and New Zealand, Shaver Shop is a leading retailer of hair removal products. With a capitalisation of almost $170 million and a healthy dividend yield, they are the first addition in this list. In March, they paid an interim dividend of 4.7 cents, and in September, this was joined by a final dividend of 5.5 cents. This 10.2 cents on a current stock price of $1.28 represents a yield of 8%. This dividend payment is unchanged from 2023 and is slightly up on 2022. As a capex-light business, Shaver Shop paid out 85% of its 2024 net profit to investors, and much of the remainder went towards paying off debt. Not only did investors earn a healthy dividend over the past year, but they also saw a 26% increase in Shaver Shop's stock price. Second up, we have Cash Converters, a legendary pawnbroker in Australasia with over 600 stores globally. Since 1984, they've expanded beyond Australia's borders into 16 other countries. These offshore operations are managed via franchising agreements. Beyond just trading in second-hand goods, they also offer loans, which of course can be a strong earner if managed well. Cash Converters today is a $130 million business, offering investors an interim and final dividend of a cent per share. This is unchanged from 2021 after the pandemic. 2 cents on a current stock price of 22 cents represents a 9.1% yield, well above the 5% currently offered in the savings space. This is a 72% payout of net profit to investors in 2024. The stock price has remained flat over the past year, increasing just 1 cent or 4.8% to 22 cents. Third up is the IVE Group, Australia's largest diversified marketer with over 2,000 staff and revenue in excess of $1 billion a year. They've been around for over 100 years, and their 2,800 clients include many household names like Woolies, Coles, and Sanitarium. The IVE Group has a capitalisation of over $300 million, and for the past 2 years, it has paid an interim and final dividend of 9.5 and 8.5 cents respectively. A payout of 18 cents on the current stock price of $2.07 represents a current yield of 8.7%. The IVE Group have pretty much paid their entire 2024 earnings out to investors, but they have managed their cash well and grown their balance by a couple million over the past year. The stock has remained popular, with its stock price growing over 14% over the past year. Fourth up is Fonterra, which is one of 2 additions from the New Zealand exchange. With an 80% market share in New Zealand's milk production, Fonterra is a 6.5 billion Aussie dollar giant in the dairy industry. Throughout 2024, Fonterra has paid an interim dividend of 15 cents, a final dividend of 25, and a special dividend of a further 15, taking total dividends for the year to 55 cents. On a current traded price of $4.49 in Kiwi dollars, this takes their dividend to a whopping 12.2%. Even without the special dividend, it was a whopping 8.9%. With a dividend like this, it would be criminal not to include them in this list. You can also find them dual listed on the ASX under the ticker FSF. Despite paying a special dividend, the payout ratio sat at 82%, and their stock price roughly doubled in price. Fifth up, we have Horizon Oil, a crude oil extractor with 3 sites on Australia, New Zealand, and China. In 2024, the $300 million company paid an interim and final dividend of 1.5 cents. This 3 cents is a 15% yield on the current traded price of 20 cents a share. The company's performance was down in 2024, with the dividend payout being greater than the company's profits. With negative net debt, the balance sheet remains strong and the historical payout ratio has been reasonable. The stock price has risen 25% over the past year, rising from 16 cents to 20. showing investors remain positive over Horizon Oil's prospects. Now we're up to our 6th stock, Q Energy Resources. They're an oil and gas producer with sites in Australia, New Zealand and Indonesia. The company has a capitalization of $70 million and is new on the dividend charts. In February, Q Energy announced the introduction of a dividend policy on the back of a strong cash position and profit outlook. This announcement saw the price of the stock almost double at the time, leading to a one-year increase of 75%. A total of 3 cents was paid out in 2024. Made up of a single special dividend of 2 cents in April and another 1 cent payment in September. On a current stock price of 10.5 cents, this represents a 2024 yield of 28.6%. Assuming the special dividend was a once-off, the yield is wound back to a still respectable 9.5%. As one of the smallest stocks in this list, and the most recent to start paying dividends, it's certainly not to be taken as a reliable dividend payer just yet. But of course, in this video, we're just looking at those that technically pay the highest yields, as Q Energy does. The special dividend cost the company $14 million, which is almost dollar for dollar with their 2024 net profit of $14.2 million. Up 7th is Mitchell Services, a $77 million drilling provider to the mining sector. In 2024, they paid 2 dividends, a 2-cent interim dividend in Feb and another 2-cent final dividend in August. On a 36-cent stock, this represents a current yield of 11.1%. However, as you can see here, they aren't a reliable dividend payer, so similar future payments are not assured. In 2024, Mitchell's dividend payments were the equivalent of 96% of the company's earnings. This of course is considered to be pretty high. Despite this, the company managed to pay down some debt and cover its capital requirements comfortably. Over the past year, Mitchell Services has seen their stock track sideways, having traded at 36 cents a year ago too. Now we are up to our 8th stock, NZME, which trades on both the Kiwi and the Aussie exchanges under the ticker NZM. This company operates in the media and entertainment space in New Zealand with over 50 brands across radio and print. Of their brands, one of the most popular is the New Zealand Herald, which is the most widely read news source in the country. NZME has a valuation of 177 million Australian dollars, and it has traditionally been a good dividend payer. In 2024, NZME paid out a final dividend of 6 cents in March and an interim dividend of 3 cents in September. On a current traded price of $1.05, this 9-cent dividend represents a dividend yield of 8.6%. This is a healthy yield. However, the economic state of NZME isn't so flash, as the dividend payments have exceeded company profits for a couple years now. In 2021, NZME had $13 million in the bank, but today they have just 5, after paying excessive dividends despite falling performance in recent years. But regardless, they made the cut as they are among the highest paying dividends right now. The future, well, they'll need to improve their performance for sure. Despite all of this, the stock has risen over 20% in the past 12 months. Our 9th stock is Globe International. Globe sells apparel and skateboarding equipment in 70 countries around the world. They were founded in 1985 by 3 Australian brothers, and today they turn over well in excess of $200 million of goods each year. The company has a capitalization of about $130 million and pays 2 dividends a year. In 2024, they paid an interim dividend of 9 cents and a final payment of 13 cents. Over recent years, the payments have been variable, but they have always paid something since 2015. On a current traded price of $3.10 a share, the total dividend of 22 cents represents a yield of 7.1%. Globe paid 65% of its 2023 net profit as a dividend, which is a better cover than many others in this list. Over the past year, the stock price has risen by a very humble 2%. Up 10th is Prime Financial, a financial advisory and asset manager with over $1.2 billion under management. Prime has a market capitalization of $50 million, and interestingly, 45% of the company is owned by its employees, of which there's just under 200. The company has paid dividends for a long time, progressively increasing the amount since the pandemic. In 2024, they paid an interim dividend of 0.7 cents and a final payment of 0.9 cents. On a current traded price of 22.3 cents a share, this represents a dividend yield of 7.2%. While in recent years their payout has been around 50% of their net profit, In 2024, this shot up to 95%, which is considered to be very high. This was due to a drop in profitability on the back of growth-fueled operational spending. As Prime's employees own nearly half of the company, it's fair to assume that much of their wealth is directly tied to the performance and the dividend payments of the company. Unfortunately for them, the stock price is virtually unchanged from a year ago. Now we're up to our 11th stock, GR Engineering Services. With a market capitalization of $350 million, they're a process engineering company largely in the mining sector. It is a diverse field which requires a lot of technical expertise in efficiently assembling equipment to extract minerals. The company is a steady dividend payer. In 2024, the company paid an interim dividend of 9 cents and a final dividend of 10 cents. On the $2.12 trading price, this equates to a dividend yield of 9%. With a net profit of $31.2 million in 2024, GR Engineering paid out $31.3 million of this to shareholders, slightly more than 100%. This has seen excessive cash leaving the business over recent years, so we may see the yield wind back in the future. The stock has also seen a fall of just under 2% over the past year, though it has seen a recent recovery up over 10% since September. Up 12th, we have Autosports, a $500 million company retailing cars. In total, they operate over 55 dealers in Sydney, Melbourne, Brisbane, the Gold Coast, and in Auckland. Across their network, they sell many brands, all the way from Minis and Subarus to Rolls-Royces and Lamborghinis. The company is a long-time payer of dividends. In 2024, they paid 10 cents as an interim dividend and 8 cents as a final payment, the same as in 2023. On a $2.45 stock price, this represents a 7.3% dividend yield. Currently, it sits at 66%, which is high for a car retailing business that requires substantial capex to maintain and develop its dealer network. With almost $1 billion in debt, Autosports are highly leveraged with an estimated $50 million interest bill each year. This might be a risk to future dividends. Up 13th, we have Helia, a $1.2 billion insurance company that specializes in lenders' mortgage insurance. Lenders work with Helia to insure against potential losses in the case a borrower forecloses and the bank can't recoup their lent capital. Often, this comes at a big cost to low equity borrowers. In 2024, they paid 3 dividends. There was an interim dividend of 15 cents, a final of another 15 cents, and a special dividend of 30 cents, taking the total to 60 cents. With a current traded price of $4.17, this equates to a 14.4% dividend yield. Without the special dividend, it would still be 7.2%. These special dividends have been regular for the past couple years. The dividend payout ratio stands at 83%. Over the past 12 months, investors have seen the stock price increase over 15%. Now we're up to our 14th stock, Finbar. Based in Western Australia, Finbar is the largest developer of apartments in the state with 78 projects under their belt. They also have a capitalization of $240 million. Finbar has existed for a while and they have paid dividends for most years. In 2023, however, no dividends were paid. In September 2024, however, a whopper 8-cent dividend was paid to investors. On the current traded price of 88 cents a share, this equates to a 9.1% yield. With a strong uptick in revenue and profits in 2024, Finbar appears to have volatile revenues and the sale of their projects can have wild swings. This is common among developers, but to us as dividend investors, we should tread lightly with such stocks and be careful when projecting future expected dividends. The stock price, however, is up over 35% for the year. And finally, we have our 15th and final stock, SG Fleet. They are a major vehicle fleet and lease specialist with operations in the UK, Australia, and New Zealand. With a capitalization of over $900 million, they manage over 250,000 cars globally. In 2024, the company has paid an interim dividend of 9.6 cents, a final payment of 9.3 cents, and a special dividend of 15 cents. This is a dividend yield of 12.6%, or without the special dividend, a flat 7%. SG Fleet paid out 64% of its 2024 net profit as a dividend to investors, which is roughly in line with the past couple years. The stock is also up 8% for the year. Today's video is sponsored by eToro, one of Australia's leading brokers offering stocks, ETFs, and crypto all in one convenient platform with a unique focus on social trading. With eToro, you can connect with a community of investors, explore their strategies, and even replicate the trades of expert stock pickers directly to your own portfolio. It is a powerful way to learn from experienced investors while building your own investment skills. Whether you are just starting or looking to expand your portfolio, eToro provides a streamlined, user-friendly experience to help you reach your financial goals. If you enjoyed today's video, make sure to check out these 2 videos here and subscribe down below. Thanks for watching, and I look forward to catching you on the next one. Cheers.